Hey, welcome to the Data Analysis and Policy Show, the show of policy in paradise, right from Curacao. And my name is Runy Calmera, and in this episode, we will talk about how does China's economy rank to the world. If you are interested in China's economy because of the coronavirus currently happening, uh, if you want to invest in China, if you want to analyze the economy of China as a policy advisor, this episode is for you. Stay with me because it's going to be awesome. Hi, my name is Runy Calmera, and as you know, I have been giving these kind of shows for the last 6 months. Last 6 months, every week during the last 6 months on Friday I give these shows, but this is a special episode. This is a special episode because right now I want you to understand everything about the Chinese economy, how important the Chinese economy is. So if you have any questions, just ask the questions. Let's start right away. The topic of this episode is how does China's economy rank in the world. You hear a lot of things like China is becoming very, very important for the world. You hear also that how does China compare to the United States. You also hear about the value chains, like how every business or most businesses are connected to China, because if something happens in China, like they don't produce any pieces anymore for this iPhone, then there will not be a production of iPhone. Food, a lot of other things are produced by China, and the value chains are interlinked. So to give you a perspective, we are right now preparing for our next program of China, the Chinese impact, the Chinese economic impact of the world. And for introducing that program, I'm just giving a couple of live shows, especially geared towards the economy of China. So the next few weeks, maybe 4 weeks, we will be posting about China. So I found a great website. It's from the CIA. I will just show you the website. And this website, if you stay with me, you will see this website, how what are the key factors? How does China rank to the rest of the world? I want you to share this episode on your Facebook page. If you are watching me from Facebook right now, just help me share this episode, or in the comments below, type the names of people that you think are important, that would like to watch this episode and also ask questions. Because the thing with life is everything can go wrong, anything can happen, and you want to be able to ask questions right away. So I'm going to share my screen right now, and when I share my screen, you will see a presentation, a short presentation, and in that presentation I'm going to talk to you about data. What kind of data do we want from each economy? If we are going to analyze the economy of China, we want to have some data, and I'm just going to show you what kind of data you need to look at when you are looking at an economy, okay? So let me share my screen, and when I share my screen, let me go there. I will show to you the kind of data. So you're seeing this, and today's ranking. I want you to look below and see that link, and that link, I will show that link also in the end, because in that link you can be on the waiting list for my next program, China's economic impact, and it's an early bird waiting list, and it's free to join. And if you are interested for that, just join, make a screenshot of that right now, and I will also be dropping that in the comment. Let me see if I can drop that in the comment. I can drop that in the comment. So there you have it, the link. Don't click on the link right now, but let's move to the next sheet. So what kind of data? You have a couple of data. You have the real data. the real sector. So if you're looking at the economy of a country, you want to look at the real data, the real sector. The real sector is the actual economy. It's sectors of products and services. So what's happening in China right now with products like the iPhone, like anything. It could be cars, it could be anything. That's the real sector. The household sectors for people, economists amongst you or investors, maybe you already know the household sector, but the household sector, I define it as the labor market, the population, immigration, emigration, immigration, and these kind of things, and the people. So it's about the people, okay? And then the next sector is the fiscal sector. So we will be looking at indicators of the fiscal sector. That's the public finances of the country, its revenues, its expenditures, and its debt. Its debt. It's very important to know the debt of the country, okay? And then the external sector. The external sector is the trading of the company in services and products with the world. So does this country trade? How does it trade? What kind of indicators can we have over there? And finally, the monetary sector. The monetary sector is about the money of the country, its currency, its exchange rate, and how it is linked towards the other currencies of the world. Okay, so to summarize this part, when you have those sectors, you want to look at those sectors, and when you look at those sectors, you want to now find indicators in these sectors. So we are not talking about sectors like agriculture, like finance, etc. But these sectors, how I define it right here, you want to look at the indicators in these sectors and monitor these indicators. I'm going to look at these indicators with you. So moving back, I want you to click on this link. Click on this link later on after this presentation. Click on this link and join my wait list on China's economic impact. Because when you join that list, you will get more of this information. You will get notified as first one when my doors open for the program. So joining the list won't cost you anything. Joining the list is just you raising your hand. Okay, I want to know more about this program. I want to know more what you have to offer. But you will be first to be notified when this program gets open. And I'm opening this program to the world, so you want to be on that list so that you can know what's happening. And in that, the experience I'm creating, I'm finalizing, is to go much deeper on China's economic impact. You can send other people to this list. I don't care if you send other people to this list. Share it with other people so that we know exactly what is happening. But the best thing to do is tell the people to watch this episode. Don't share it with people. Tell the people to watch this episode and let them click on this link or join this link themselves. Okay, so don't send this link out there. Just let the people do that. Give them this episode. Okay, so this is the source of data. Let's look at the data now. What is the source of data? The source of data of China and also the world. This is the CIA Gov. So I'm going now to that website. Let me show. I'm going to that website, and when I go to that website, what you see there, up there, is you see CIA. Who's CIA? You can read it here. CIA is a great Central Intelligence Agency. They produce the fact book. And in that fact book, there are many data. There is many data about that. So we check this website yourself. I'm going to click this and put this website in the link below for you. So you can do this analysis by yourself at home. Okay, I'm going to focus on a couple of things. So the first thing is the real sector. So what you see here is you see this data. This website has all the data of, not all the data, but most of the data, relevant data, some of the data for the countries. They rank the countries in the world. It's official. So the work of a nation, the center of the intelligence data is very important. So I'll be looking at data and me telling you, check the previous episodes also, episode 35, where I show you how important data is. And I already showed you in a previous episode, episode 35, what data is about and what kind of data. And now we are going deeper. We are now going to rank China to the world. Okay, so this episode is ranking China to the other countries in the world, so that you can see how important China is or not. Where does China rank? So I'm not going to look at other indicators, other areas, but I'm going to dive right in economy, because we are interested in the economy. We can do other things also, but you can look at it for yourself. So this is economy. When I go to the economy, and remember I told you about the real sector, I'm going to check a couple of indicators now in the real sector, and I'm going to look at the indicators, and now we're going to rank it. So if you have any questions, just ask them in the chat box. But the first thing I want to look at is the gross domestic product. So how big is the economy, the gross domestic product of China? So the gross domestic product of China, I'm going to type it in there. And then there you see China is the first country ranked on number 1 regarding the gross domestic product. That's how big the economy is. So here it says, even the CIA, they tell you, I think it's a United States organization, global organization, the CIA, the sources, they tell you that China's economy is bigger than United States. So I think this is like trillion. I didn't check it. It's $25 trillion, and the United States is $19 trillion. So it's always good to check the first one and the second one. So Chinese economy is bigger, number 1, than United States. Who's at the bottom? I'm scrolling downwards, and you will see a lot of small islands. Number 229, that's about Tuvalu, that's Tuvalu. Those are small island economies that I'm also checking, but this is 1 million. So imagine that. It's very big. St. Martin, number 214, 365, let me see, 365 million. Okay, so check it out. Number 1 in the world. So going back, and now we're going to see at GDP per capita. GDP per capita, that's another real sector indicator. It is about how wealthy is that country. Because if you have a huge GDP, but you have a huge population, you have to divide GDP, which is the total income, divided by the population, and you get GDP per capita. That's an average of what the people are earning over there. It doesn't mean that everybody is earning that, but it's an average. You can rank rich countries to much wealthier countries to much less wealthier countries. That's the first real sector indicator you want to check. So I'm going in economy, and I'm going for the GDP per capita. GDP per capita, click that. So now you see there's something. We don't see China. So the first one is Liechtenstein. Okay, first one, $139,000. Those people in Liechtenstein, they are very, very rich. And if I want to look at China, I'm going like Control F, and I'm going for China. And then you see China is the 96th position with 18,200. 18,200, that's a lot of money because it's even close to our island, which is Curacao, which is a little bit higher than that. So in a couple of years, China has moved along in the ranking. 96th country in the world out of the 28. So the poorest is, you see, Central African Republic. Burundi, 700 a year. $700 a year. So those people are more poor. And then on the top, you see Liechtenstein, and China is number 96. So that's it. 96th position in the world in per capita. So tell me, how do you like it? Do you like this? Are you enjoying this? If you are enjoying this, give me a thumbs up. Give me a thumbs up, and then I can continue. So now let's look at the household sector. The household sector is more. We're looking at the labor market indicators now. So let's look at the labor force. The labor force is the total people working. Because as an investor, as a policy advisor, you want to know the people, the labor force is the people working and the people unemployed. You see, unemployed and employed, that's your, it doesn't care if you are employed or unemployed. You are part of the labor force. The labor force is very important because those are the people who can generate, at least the ones who are earning money, who are employed. They can earn the money. They can earn the premiums. They have the buying power. So if you are looking at countries with a huge labor force, and the labor force is most of the time between 15 years and 65 years, those labor force, the countries with a lot of higher labor force, they have the potential that they can buy your stuff. So the labor market, China is number one. 800 million people in 2017. Look at that. So that is higher than the United States. You see how do you compare? Because United States has a labor force of 160 million. So it's quite a lot. And then let's look at the smallest. The smallest is Pitcairn Islands with only 15 people. 15 people, and there you see also Tuvalu. Those are the islands with 400 people. 440 people. So this labor force means that there is a lot of potential. During our program, looking further, if you join the program or join the waiting list, I will tell you more about it, but we will dive more about the labor force, because the labor force is not, this is the first thing, but you have to dive a little bit more on the labor force. So I'm just giving you the highlights here. So the economy, the unemployment rate, look at this. You could have the labor force that big, but now, are they employed or not? If 50% of those people we just saw on the labor force, they are unemployed, then it's no sense. So the unemployment rate is now further giving you in the household sector again. We are looking at the unemployment labor, and unemployment rate is going to give you how many people, what percentage of those people of the labor force are employed or not. Now, are you an investor? Are you a policy advisor? Maybe you are a policy advisor and you are working with China. You are looking at people how many people travelers can be. If they are not employed, then they are not working in the labor force, then probably only the millionaires will come to your country. But if you have a large labor force and they are employed, they are all employed, or a big percentage of them is employed, then you know that that's going to affect your stay over tourism or your cruise tourism, your market. You see, now let's look at China. So the first one here, it is best to get, like, you have to have we're looking at the lowest ones and the highest one. So if you are lowest unemployment rate, that means that's good. So Cocos Islands, they have like 0.1% unemployment. I mean, nobody is unemployed there. So their whole labor force is working. Thailand. So where is China? Let me go and find China. You see there, China is number 48 with an unemployment rate of 3.9%. That's very, very low. I mean, our island, Curacao, has an unemployment rate of 21%, and I will be very happy to have an unemployment rate of 3.9% here in Curacao in the Caribbean, because that means everybody is employed actually. So this is very good, and this is a very great rate also compared to other countries in the world. You look at Switzerland. So let's look at the bottom one. Who is the most unemployed? And that's Burkina Faso. 77% of the people there are unemployed, of the labor force is unemployed. So that is very bad. That country, actually everybody is unemployed. Almost everybody is unemployed. So that means that, you see here, most of them African countries, high unemployment. Venezuela, 27%. And then United States, because you asked it, where's United States? Control F, United States, that's 4.4%. So United States doesn't rank bad compared to China, but China's economy, China's unemployment rate is much lower than the United States. You see that? That's the facts. So that's another. We are moving from the real sector. We are moving from the real sector, and that's basically what I wanted. This is the household sector. We're looking from the household sector. Do you have any questions? Type them below. Even if I'm not here, you are looking at this as a replay. Even type this. If you're looking at this on Facebook, type it in the comment below. If you are looking at this from YouTube, just type in the comments, and also LinkedIn, type in the comments. I will be looking at the comments. So now we're moving to the financial sector, to the fiscal sector. The fiscal sector, that's the budget of the government, like I said. It's the debt situation, and it is how are they doing. So what I want to do there is I want to look at the financial sector, which is the budget deficit. Yes, the budget deficit or surplus. So this is, what is this? This is, are you having a high budget deficit, or are you having a low budget deficit? Are you having a surplus or a deficit? So this is Tuvalu. Tuvalu has 25% surplus of GDP. So that's good. That's good because they have their revenues are lower than their expenditures. No, sorry, their revenues are higher than their expenditures. That's why they have a surplus. So this is good. They can do a lot with them. So now where is China? You see? Control F, China. I want to look at China. That is China 152. China has a 152, and this is minus 3.8. 3.8, that is a deficit actually. That's a deficit. And mind you, the world, what they say is you need to be below 3%. So China is not below 3%, but Malaysia is about 3%. So the OECD norm and the European norm is 3% deficit. So if you are below 3%, then you are good. China has a little bit higher, but let's look at the United States. Where's the United States in this? Control F. United let me see if I can get that. United States. Let me see. It's not showing up. It has to show up because let me see. I need to look at the, yeah, I need to look at my United States. United States minus 3.4, minus 3.4, close to China. Now, if you look at United States, is 145. So if you look at the worst country, who's at the bottom, that is Timor-Leste, 75%. This means that you are way with problems. You see, these are again Venezuela, 46% of the GDP. This is like very bad. These problems, these countries are in financial problem. The governments cannot manage their economies, cannot manage the public affairs. So are you liking this? If you are liking this, give me a thumbs up. Give me subscribe to this YouTube channel if you're looking at this in YouTube. So now let's look at the public finance, and then let's look at the next one. The next one I want to look at is, you can look at the other public finance, but I want to look at the external sector. So how is China trading with the world? What is the position of China? And this is very important because export, the external sector, is how are you trading services and goods to the world. And what happened with the coronavirus in 2020 is that because China is so important for the world, trading with the world, that's why we are feeling the effects of the coronavirus. If you're looking at this in the future, probably there is more right now about the effects on the economy, but the whole economy of the world in 2020 is currently almost fearing a recession. I mean, we were already down with economic growth of the world, and now because of the coronavirus and because of the impact that we don't receive products from China, we cannot trade anymore. So it's very important to look at the trade position. So what indicators are we looking at? First, we will look at the exports. So who's the one exporting the most? Exporting means selling services and goods to the world. If you are a big exporter, then you are really good. Curacao is exporting services. Curacao is exporting tourism services, not many goods, but to give you an example, China is exporting a lot. So let's look at the China's at the total exports, and look at that. Look at that, my friends. China number one with, I think, 42, I cannot even pronounce that word, but like 9 figures would be billion, and I think this is like trillion. So it would be 2.5 trillion dollars. And China is exporting more than United States. It's almost like twice the United States, because United States is exporting 1.5 trillion. So remember that figure because it's going to be very important. China 2.5 trillion, correct me if I'm wrong, and United States is lower exporting than China. These are in dollars. Who is the one at the lowest? Tokalo 0. They are not exporting anything according to this table. And then you have like Tuvalu 600,000. So that's the range. That's the range of the exports. So that's the first one. But the exports are not only the most important thing, because the imports are also important. Imports mean you are buying stuff from the world. Okay? So you don't want to be the biggest importer, but probably If you are importing a lot, you have a lot of power. Let me tell you something also. If you are the living standard of Curacao, for instance, is dependent on its imports. Because if we have this iPhone, this computer, the different things in my studio, the lamps, if you are not producing them, then we have to import them. So importing, most Caribbean islands, they are importing stuff, a lot of stuff, and their whole standard of living is dependent on what they can import. If you cannot import anything, then probably the standard of living is lower. You don't have the money to import. So I expect African countries to be lower, and then more developed countries also to be high in the importing. Okay, so now look at the imports. Now look at the imports, and then you see, boom, United States of America is importing more than China. So the number one importing, and probably they are importing it from China. United States is importing $2.3 trillion, and China is importing 2.1 trillion. And you also have like Germany coming up there, Japan, etc. Asian countries, okay, importing. So now who's at the bottom? At the bottom of the list ranks Tuvalu again, with only 969,000. So Tuvalu, they have 900, almost 1 million. They are importing and they are exporting zero. That means that they have a deficit on the current account. So now let me look at that indicator. That's another indicator of the external sector, which is the current account balance. Now, this is very important, guys. The current account balance is basically the exports minus the imports. The exports minus the imports is the current account balance. If you have a balance and you're trading to the world and you have a huge positive balance, that's good, because all those dollars, they will add up to your reserve, your stack of dollars. If you have a negative balance current account, that means that you're trading to the world, that basically you are buying more stuff than you are buying more stuff than you are selling them. Your imports are higher than the exports. Okay, so look at that. Where is China? Control F. So let me look at China. And China is the current account balance is 164,164 trillion. Let me see, billion, no, billion. 164 billion. So 164 billion dollars is China's surplus. That's the amount of money that China gets and can stack all the time. You see the Netherlands. I'm part of the Netherlands because Curacao is part of the Netherlands. Ask me more about that. But you see here, Netherlands is a very small country, but still has a huge 87 billion US dollars. So Netherlands is a champion in exporting because they are trading a lot, or people are trading through the Netherlands. You see, so that's China. Now look at the United States. Where is the United States in the current account? And you won't believe it. So the highest, the negative current account, 449 billion, is the United States. So guys, I really need to have your attention here. What does this mean? What does this mean? This means that China is at the top of the list regarding the current account balance, and United States is at the bottom of the list for the negative current account balance. That means that basically United States is having a huge deficit on its current account, meaning that its imports are much higher than its export. Now that needs to be financed, and if you have a huge current account deficit at a normal country, that means that you need to have money coming in, and when that money needs to come in to finance that. So if the United States would not have been the money, the dollars in the world, then the United States would have been in a huge problem. Okay, so that's what I wanted to show you, this part, because there are like United States, you know, a lot of countries all there, they have like negative current account. So that's one of the indicators. And the last, one of the last indicators I want to show you, because we are already in the current account, I want to show you the debt. So what's happening with the debt? The debt, if you have a huge debt, let me see. No, I want to show you. Yes, I'm showing you the. I will leave the debt for later, but I'm going to show you the reserves on the foreign exchange. So these reserves. So when you trade, you receive dollars and you spend dollars. But the balance will add, the balance of the current account will add up, and that's basically they're talking you the reserves. If you have a high reserve, then you are sound financially, okay? Because imagine Curacao, the norm there is that you need to have 3 months coverage for your country. So imagine everything stops on Curacao right now, then we need to have 3 months of dollars or euros so that we can keep importing our goods and services. If we don't have those dollars, then suddenly it will stop, because our living standard, we cannot afford that living standard anymore. I told you that living standard is connected to the how much you can import. Okay, so if the total reserves is lower than 3 months, then you are in trouble. The 3 months is the definition. That's the level, the target level you want to have. But for smaller islands, you want to have actually 6 months, because when something happens and the exports stop, there is something with tourism, there is something with like a virus or something like the coronavirus, then that means that the export will stop, but you need to continue to import your food, your living standard, etc. So that norm of 3 months is very important. So we're not giving the months right now, but we are going to see the results, which is the reserves of the foreign reserve. So reserves of foreign exchange and gold. How much gold do you have? Gold is another story. I'm not going to tell you anything about gold. I'm going to leave that to my dear friend, wealthy investor, Eric Panafleck. He knows a lot about stocks, about all those golds, etc. So this, China, look at this. China has a huge reserve in dollars, in foreign exchange, and gold. That means that you don't see it right here, how much it is compared to their imports, but you need to join my waiting list, and then I will tell you more about how you can calculate those things, because that's for the insiders of my community. Join that waiting list, and we can talk about that. And then if you join the program later on I'm working on, is also we are going to go much deeper and see these things. But that is also very important. Look at this, China. China is #1 in the foreign reserves, and it is of course normal, because they have the huge current account surplus. They have been piling data year over year, and they have this reserve. So how much is this reserve? It's like something like, let me tell you, $3.2 trillion. So China has those $3.2 trillion our foreign reserve. That means it's a stable, it is connected to their PEC. If Curacao, for instance, They don't have, imagine Curacao or another island, Barbados. Imagine Barbados, and they are lower. They went with their reserves lower than 3 months. Immediately, the exchange rate started, people stress on the exchange rate. That means that one Barbadian dollar, if it is pegged, let me put it, one Eastern Caribbean dollar, $1, one United States dollar is pegged to 2.7 Eastern Caribbean currency dollar, Eastern Caribbean dollar. If you don't have any reserves in the Eastern Caribbean anymore, that means that it's going to be, people are going to speculate that there's going to be a demand and supply against the Eastern Caribbean for the dollar. You see, and then that's what the exchange rate will change. Now, you want to see those things in a simulation, and I'm going to tell you, in the Chinese experience, there's going to be simulation also. What's going to happen? Imagine what's going to happen. So this is China. China is number one with the foreign reserves. And where is the United States? Where is the United States? I wanted to see the United States. Let me show you here. Let me Control F. United States number 20. So United States has foreign reserves at 123 billion. Yes, 123 billion dollars. So of course the dollars are in the United States. So all those dollars, I mean, this is what happened. All those dollars of United States, they have been traveling to China, and China now has those dollars. Of course, China cannot dump those dollars, or China cannot do anything with the dollars, but you want to have those dollars, and when you have those dollars, it is important. This is what I want to leave you with. When you have those dollars, it is important to have the foreign reserves. But there is a power between China and United States. You see that one? Number 20, you are number 20, and your currency, China has more of this currency than yourself. That's something to think about. Just think about that and let me know in the comments what you think can happen. So that's the foreign reserve. And then let me move on to I think one of the last indicators, because I took a lot of your time, but I think this is very, very important, is the external debt. Let me see external debt, because the external debt is how much are you indebted to the economy. Okay, how much are you indebted? Let me see here. The economy, and then that is the debt. So there was two things with the debt. I want to show you the public debt. I could have seen the public debt. I could have put that in the fiscal sector, and the external debt, I could have put the debt in the external sector. So no, the external debt, I could have put it in the external sector, and the public debt, I could have put that in the fiscal sector. But I just put the debt in there because they are related. That's like a little bit advanced, but they are actually related. But let me show you the public debt first. The public debt, you don't want to be high on this ranking. I mean, you don't want to be high on this ranking. So Japan has a public debt of 237% of the GDP. What does it mean? It means if Japan has like twice, more than twice their income, their annual income is in debt. I mean, if you are above 100%, you are in trouble, big trouble. If you are, the target is 60%. So everybody below 60%, and that target is of the OECD, Association of OECD. That is a target. IMF also has the 60% target. So if you are higher than 60%, actually you are in big trouble. If you are in Africa and you are higher than 60%, they will start asking you questions about the structural adjustment. If you are an investor and you are looking at a country with a debt of higher than 60%, that means that your bonds, your investments you are investing in, they are at a higher risk, at a higher volatility, because suddenly Moody's or one of these rating companies can start putting another rate, a negative rate, to your investments. You see, if you are a policy advisor, you're looking at this and you see a high indebted country, that means are you trading there? Are you going to trade with that company, with that country? Are you focusing your policy on that? So that's very important. You see Greece, etc. So where is, Control F, where is China? Because we are ranking China today. China has like 46% of GDP. Lower than half their income is in debt. They are not indebted. That's basically what it's saying. They have their debts, their fiscal debt. They have their debt, yeah, in the right range. And now let's look at United States, because we are always looking at United States. United States, 36th place with 78%. What does it mean? United States is higher than the target of 60%. So which are the countries? You see here it's ranked. So all these countries, and then around, let me put it around, where's the 60% target? Let me say we are the most of the countries, and then I think around Israel. Israel is just 60%, and then you have Iraq. Look at that, Iraq, Vietnam, Netherlands. Of course, I'm so happy that I'm living in a part of the Netherlands. I'm not living in the Netherlands, but Curacao is part of the Netherlands. So look at this. You see, lower, the Bahamas. So who's the lowest? Who's the lowest? And that is something like, you know, Macau. Macau, Falkland Islands, they don't have anything. Let me see, Timor-Leste. That's a very low debt, fiscal debt. And then the last one is, of course, the external debt. Now, the external debt is very important, because that is basically debt external. That is basically, is your debt, who's the person at the other side of your debt? Is that your own public sector, or is that the other public sector from other countries? Is that the private sector from other countries? Because I could be having a public debt which is financed locally, but I could have a public debt and that is in dollars, in euros. And when something happens with the euro exchange rate compared to the Curacao guilder or the Dutch Italian guilder, my money, then I'm a problem, because I need to be paying more interest, more rep. So if you have a local debt in your own money, it is a different situation than if you have a debt in another country. And this is the external debt. So a lot of countries have had this problem, and a lot of countries, let me just show you, a lot of countries have had this problem. Argentina, Latin American countries, they have had this problem because they had a huge external debt. They finance their problems, their deficits, by lending money outside. If you're doing that, you are in deep problem. So let's look at this. It's not, let me look back. So let me see. So this is the public debt. So United States has a huge, the highest debt of, let me see how this is. This is like something, I think this is like $17 trillion. $17 trillion. United States has the biggest debt. Netherlands also has something, external debt. And allow me look at China. Control F, China. China has the public debt lower than the United States. You see, 1 trillion, 1.5 trillion, 1.6 trillion compared to 17.9 trillion. So regarding the debt, United States is more vulnerable than China. Of course, you have to take the debt, compare it to the GDP, etc. They are not doing this. This is just the big debt. But it is very important. Who is the lowest? Who is the lowest debt in the world? Of course, Macau. And then you have some islands. Montserrat. Hi, my people from Montserrat. As you know, I love the Eastern Caribbean, and I've created 8 economic models of the Eastern Caribbean. So Montserrat has like, okay, 8.9 million. 8.9 million. So that is it. Anguilla, Kiribati, etc. So that's it. So let me close out, because that's was it today. I want to give you everything. This episode has been much more than I planned. I planned only 15 minutes, but this is it. This is what I have to give to the world. This is what I have to give to you. I mean, remember, this essence, this kind of workshop, this kind of what I'm doing right now, people pay me for this. So I don't have to do this every week. I don't have to give you this information. But I'm giving you this information so that you know how important China is. Now, what can you do for me? What can you do for me? How can you join the club if you are interested? Now, in there, in the link below, you see that? The link below here, boom. Waiting list, Calmera.lead pages, etc. So I have put this link in here. I will put this link here in this episode's show notes. If you're looking at this on YouTube, on LinkedIn, on Facebook, you can see this down there. My call to action, the action you need to do to take right now is, of course, like this page. If you are on Facebook, like this page to know more, because you will see more episodes, of course. But I want you to click on this link, click on the link in the show notes, and then see where it takes you. It will take you to a page, and the page is here, and I'm showing you my screen so that you know where it is going to take you. It's going to take you there, and then you're going to say, yes, Runy, I want to rush to the front of the line so I can be the first one notified as soon as China's economic impact is available. China's economic impact is my signature program that I'm finalizing right now. We are going to create an awesome experience. It's not open yet, but right now the doors are closed. As soon as the door open, you will be first to notified. So it will not cost you anything to join this list. I will not spam you, but I will inform you. And I'm just putting this right now again. I want you to click on there, and I want you to share this episode with a lot of people. Click there so that you will be on the waiting list for the early bird. And the early bird means the people who get the scoop before the thing happens, before I publish this to the big world. Okay, so that's it. So join that waiting list. Join the waiting list. It won't cost you anything. Of course, share, like, publish, subscribe, but join the waiting list. If you are looking at this from the YouTube, click in there and then join the waiting list. I want you to shout out to the world to join this waiting list. And that's the way to do it, to go deeper, to understand more. Because when you join that waiting list, you will actually be the inside community that is going to show up and that is going to go deeper. I just gave you 1 hour almost of the data. So what did we cover? We covered the real sector, we covered the fiscal sector, we covered the external sector, we cover the household sector. I give you the indicators, I give you everything, I give you the link. You can go there and then check and rank, and you can impress your boss, you can impress your clients. If you are a wealth investor, you can go there. If you are a policy advisor, you can impress your minister. This is it. Join that list and you will be no more. You will be able to become the trusted advisor and the trusted financial analyst. You are going to learn so much more in this experience I'm creating, and I want you to join that. Okay, so that's it. So till next time, and today it's Wednesday. The next episode will be Friday. Friday I'm back. Friday I'm back with great stuff about China, because China has a huge economic impact in the world. China has a huge economic impact in the world, and that's why we're going to check China's economic impact in the world. That's it. Thank you very much. Give me any comments you want. If you like it, thumb up. If you loved it, share it. If you really enjoyed it, share it, and then tell everybody to go to this wait list, because you won't be waiting for long. That's it. See you next time. Next Friday. Bye.